Good evening, friends. I am KK Gupta, your host. I'm a director of Association of Financial Advisor of and also director of research in India. We welcome all the participants. I think today is a great day where more than 500 session has already been taken place. And beside YouTube and Facebook. Today's subject is very important subject of a crucial challenges in business valuations. We hold one webinar for startup where the participants, even the bankers and our colleague express their desire that we should have valuations, how a startup and other valuation can be taken place, which play very important role. When we are talking about the startup, it was started about 2001 and 2016. More than 600 startup was set up. When we are talking about 22, more than 70,000 startup are there. So they are very playing very important role in the economy. When we are talking about the 5 trillion economy in 25, startup definitely play important role for that. When we are talking about the startup, India play very important role. After USA, China, India has a third number under a startup. When we are talking about the investment, in 2014, the investment was 5.84 billion US dollars. When we're talking about 21, which figure is available with us, it is 42 billion dollar investment is taken place. So why we are holding this webinar? This is most important aspect. Valuation, because the startup is not having, because they are loss making. Even we are talking about the big startup. We talk about OYO, where you are having this losses are there. It was established 2013 and losses which was 12,079 799 crore rupees come down to about 4,000 crore rupees. Still they are getting the valuations. People are investing. So we will discuss these aspects. For a loss-making units, valuation is also there. This is also important aspect we are going to touch up. When we are talking about the valuation aspect, there are various methods. Either you talk about the basic methods, talk about the revenue multiply methods. We are talking about the workhorse method, discounted cash flow, which is very popular. Discounted cash flow method based on the 3-5-year projections and book value methods. These are the important aspects for the valuations. So we are going to discuss details. We are having an eminent personality with me. So I will not take much time. I'm only talking about the requirement of the valuations. It is a transaction valuations, which is internal valuations. And there is regulatory valuations, which constitute about the Company Act 2013, Rule 13, and Income Tax Act 1961. We're talking about the Rule 11, 2. This is mandatory for the valuation aspect, whether you're talking about the income tax or company act, or we are talking about the transactions where the entrepreneur require the valuations to offload the equity. So we are going to talk in details. So we are with us Shri Hemant Sharma, Shri Mohan R. Labhi, Shri Vinit Rathi sir, and Mr. Nitin Jain. Above all, so we are with us our respective executive director of Punjab and Sindh Bank. So he always obliged resurgent and the association. Mr. K.B. Raghuvendra has assumed charge as executive director of Punjab and Sindh Bank on 10th March 2021. He has a wide experience of over more than 3 decades in the banking industry. Prior to joining as executive director of Punjab and Sindh Bank, he was holding the position of general manager and CFO in Bank of India. He has worked all format of the banking like branch banking, corporate banking, subsidy management, etc. He has the experience of international banking and also having worked in Hong Kong branch of Bank of India. He holds various positions as a chairman of Naroda Gramin Bank, a leading RRB sponsored by Bank of India. Under the leadership of Shri Raghavendran, the RRB had implemented several path-breaking projects. The bank had received more than 20 national awards. Talking about the 20 national award during his period, his tenure. He is a postgraduate in commerce and law graduate from the University of Mysore. He holds the post-graduation degree management in business finance. He also certified associate of Indian Institute of Banker. Presently, he is part of top management, which is the midst of transforming of Punjab and Sindh Bank into tech services performing bank. He is the right person to talk about the valuations. So yes, I want to know from you, as a banker, we are lending against the assets, assets-based lending we are doing. Now somebody coming out with cash flow lending. So this valuation aspect, when we are talking about the entrepreneur valuation, how it is beneficial for the banks also? Because when we are talking about the assets-based lending, we are talking about the intangible assets also. We are talking about the goodwill, we are talking about the patent that is are being valued by the registered valuers. So how it is useful for the banking sector, sir? Have any thought on the valuation aspect, whether this is required by the bank? Because bank is also asking on the block asset valuations and collateral valuations. So I hand over to ED sir for well thought of, for opinion.
Uh, Good evening, Gupta ji and my fellow participants in the panel. First of all, thank you for inviting me for discussions in this panel. I am also enlightened by participating in such seminars because various from various angles I will be able to benefit the views of other members also and the participants. Thank you for that. The topic that you have selected, that is crucial challenges in business valuations, is a very valid and very dynamic subject, because you know that valuation is a very important part as far as the banker is concerned, as far as entrepreneur is concerned, and as far as an investor is concerned. For all the stakeholders, valuation is a very important and vital part, because based on the valuation, the business transactions take place, or the value of an entity is determined based on the valuation. But now the question is, how does the fair valuation is done? whether valuation done and the valuation methods that is adopted right now, is it proper, or is there any regulatory mechanism in which it has been specified the valuation methods and the appropriate valuation standards? This is the question that arises. These questions are arising basically because the Indian economy has become an aspirational economy. Various business dimensions have come into play. You know that in our few decades back, when we used to finance, there used to be uh, very few methods of valuation. Generally, there used to be primary security and there used to be collateral security. And collateral security used to be valued by a panel of valuers, one of the panel members, and typically it used to be intangible asset, sorry, tangible assets, where physical assets was existing. But now, with the coming of this startup atmosphere, there are a lot of things which has come into the fore. The most important thing is the intangible assets. How to value this intangible asset is a very big question. It's an evolving method. Why it is required is also the first question. So you know that if we address why it is required, you know that it may be for the purpose of mergers or acquisition, it may be for internal purposes also, or it may be for the purpose of finding out the valuation for the purpose of lending. So there are so many things for which valuation is being done. You know that till recently there was no mechanism, but what I find is our friends from ICA are here, the members. What I understand is that recently ICA has developed a business valuation practice standards, BVPS, very recently. That is what I understand. It's a very good thing because you know that our ICA is a premier institute which has the unique distinction. I think only second to USA, it is the best practice institute. So therefore, this was the very long pending. But again, whether it is complete or not, only the time will tell. But what I would like to suggest at this juncture is the valuer should take into account several things while making a valuation. As I said, now the new concepts have come into fore. New business methodology has come. So therefore, the valuation here is different. So while valuing, you know that earlier there used to be three methods of valuation. Generally, there were it was done in the three methods. One was the income method, income approach. The second was market approach, and the third approach was assets approach. These three approaches was adopted in the earlier days to arrive at the correct valuation. But with the evaluation of especially the startup uh, ecosystem, the all the three approaches may not be appropriate. Maybe some for some of the units it may be appropriate, but for not for all. Therefore, there is a need for innovative approach. So when we say innovative approach, the valuers first of all should be very he should be conversant with the various the players in the market, various methods in the market, various evolving approaches, and then only he will be able to make a evaluation. And similarly, if I come to the view of the bankers for considering these valuations, let me be honest that till recently the startup mechanism was seen with some sort of this one with by the bankers, but of late bankers have now started financing the startups based on certain approaches. Every bank has their own approach. Many of the banks now, for example, up to 5 crore, banks have become more liberal. And then the next, some of the banks, even up to 20 crores, they have become more liberal without requesting for a collateral security. Bank has been financing the startups, including our banks. But as I said, Government of India is also encouraging in a big way for startups, because you know that India now is one of the top 3 countries where the unicorns have been produced during the last few years. In fact, the fastest unicorn producing country is now India. So, in order to sustain that, and in order to encourage this entire ecosystem, the involvement of bankers is very much required, and where our the valuers part becomes very important. So therefore, what I suggest to the valuers is that they should understand the whole ecosystem. They should come to know the practices elsewhere, including in the developed economies, and also in particular context of Indian economy, how a fair and standard practice can be evolved. So these things have to be kept in mind while making the valuation, because valuation is a very important part, especially for the financier, not only for the financier, even for the investor. When we ask FDIs and FIIs to come, or even other capital entrepreneurs to come and invest in the products, the valuation becomes the basis. Maybe 2, 3 valuations generally they take, and an average is taken. So therefore, the credentials of the valuers, the high standards of the valuers has to be maintained. This is very important, uh, because this is an evolving system. So everybody should have the confidence in the system and in the process and the standards. Otherwise, definitely it will be discouraged. So therefore, valuers should have these things into mind, keep these things into mind, and then come out with the valuation standards. As far as regulatory approach is concerned, I do not know, our friend should clarify, but as far as I know, there is no methodology given by the Reserve Bank of India or SEBI so far, which is binding on the valuation or the value or this process. Therefore, that's why I said it's an evolving process, and in the days to come, I think it will be consolidated. These are all my initial remarks, and let me hear from my friends also as to what are the methods of valuation and how these standards can be improved. Thank you.
Thank you very much, sir, for inauguration remarks. I think you touch a very important issue, whether we are talking about the primary income market and assets valuations. So what about the intangible, what your suggestion is there, I think we'll keep in mind for innovative approach and ecosystems. Beside that, sir, what new concept has come, that is a discounted cash flow. We're talking about the book value, and we all talk to revenue methods also. And beside basic method, which you have explained to us. Sir, I will come back to you. I think with these remarks, let I should start rolling the other speakers. So I'm now coming to Shri Nitin Jain, who is ABP, Valuation and Investment Banking Research in India Limited. Nitin is a University of Greenwich, London alumni, now active and leader in the field of investment banking, valuations, financial consultancy, monitoring. He also a fund manager committee member, having worked in multi industries from infra, renewable energy, BFSI, consumer technology, and advise a steam client on a long-term strategy. I will not take much time for Mithun. Just I want to know from Mithun. Most of the startup have only balance sheet for period or the financial statement for 6 months, 1 year, or 2 years. Historical data is not available with the startup. Even an investor only looking after the valuations. So these are the very challenging aspects. What are your thoughts about the valuation of the startup? Because when I'm talking about the webinar of the startup, where the investor was also invited and the entrepreneur was also invited, and they are telling they are not asking for any merger. Even their qualifications, even their project is the main margin for them. Accordingly, they are taking evaluations. Mr. Jain, what is your views in respect of the startup? How the valuation can be done? How it can be beneficial? We are talking about the practical aspects, not any theoretical aspect. So please give your thought, Mr. Jain.
First of all, thanks very much for giving me this opportunity. And, I feel honored to, kind of sharing the dais with the fellow panelists. And I think the topic is again, like, YD sir has mentioned, is very critical to the current trends. Like, and yes, it is very true that we struggle a lot in terms of getting certain relevant data from startups to come up to a logical valuation. Right? Financial is definitely important to come up to a valuation, but beside that, there are a lot of operational aspect in terms of what kind of progress the startup has made in terms of its product development, or maybe if the product is already ready, what is the stage in terms of connecting with certain potential clients or users, and what's their experience with the platform or the kind of product or solution that the startup is kind to offer to particular users and clients. Right? So it's more of a dynamic approach. Yes, if there is insufficient data is available to kind of come up to a very logical number, then we kind of consider the operational aspect, the background of the founders, the kind of differentiation factor that they are building to their product or services or the solution, right? And ultimately, what kind of issues they would address as they penetrate into the market and engage more strongly with their user or client base. So those things are needed to be considered to kind of come to a logical valuation. As a starting point, what we do is that understand all these scenarios, try to attach a number to each of the aspects, and then build a business model or certain projection which ultimately will contribute to the valuation. Right? So again, there is no kind of a thumb rule here to follow, but a detailed discussion with the founders and the management team, or understanding the kind of scenario or the trends or ecosystem they are working in, and ultimately the vision and the perspective of the investor or the incoming partner is also important. Right? So each stakeholder has to contribute, tell about their story, how they kind of looking to progress, how they will penetrate in the market, and how the user or the client will benefit in the longer run. So all these elements are part of the valuation process, and if we are able to kind of attach a logical aspect to each of the elements, then definitely a valuation can be kind of built up, which can be presented to an investor, and ultimately there will be certain elements to defend it. Right? Definitely from a kind of a compliance and regulatory aspect, there are certain standards and certain parameters which has to be there, so that any regulatory authority or relevant agency can understand and ultimately, provide the approval as well, so that the ultimate deal process could be completed. But yes, again, coming back to the aspect of valuation, this is very, I would say, a collaborative, comprehensive exercise where we look at multiple aspects, not only financial, but many more. And ultimately, that can bring a valuation which can be defended. Right.
Mr. Jan,
Mhm.
when we are talking about the big games,
Mhm.
whether in my opening remarks I told,
Mhm.
oh my, we are talking about the Flipkart, you're
Mhm.
talking about the Paytm,
Mhm.
you talk about the so many, you talk about the phone P.
Mhm.
They are incurring huge losses.
Mhm.
Still, valuations are, you can say, the valuation is going up. Have
Yes.
any view on that?
Yeah. So yeah, that's one question that's kind of creating a buzz in the market, that many of these unicorns are still loss making, but they are able to raise $1 billion, or even going beyond multi-billion-dollar valuation. Right? So I would again come back to one point which I mentioned earlier, is the valuation is not only done through the financial aspect, but there are a lot many operational aspects as well. So let's say if I take an example that Zomato, Paytm may have a user on board who have downloaded the app, or doing some transaction on and off. Right? The company may not be generating very consistent revenue with that user, but still that user is registered on the platform, and the company is able to kind of gather its data. Right? So that's also contributes to the valuation, because the company is also making certain effort, certain expenses there to onboard that user. Right? So as many of us can understand that many startups kind of focus towards kind of enhancing the users base, remain connected with the users, and ultimately kind of even trick sometime the user to just even download the app, so that they can include in their database that okay, they have certain number of downloads, or certain user may be active on Analytics already, which actually ultimately excite the investors, and they are ready to kind of even agree to a higher valuation. Right? Financial aspect definitely is very important, and long term expectation is that the company would be looking to generate the revenue through that user, maybe directly or indirectly. But yes, it may not be very immediate, right? So from a financial point of view, one can see that okay, there is hardly any revenue, the company is making losses, and expenses are going skyrocketed. But still, if there is a growth in the user base or the client base, and ultimately the company is also able to prove that the product or solution that they're offering is benefiting to the ecosystem, then I think there is a logical sense to accept the higher valuation, which ultimately comes in a news, and people feel excited that okay, some company has become unicorn, and even kind of going further. Right? So this again, but again, to analyze the valuation against user base and the client, and there are a lot many other aspects around that. That's again a very dynamic approach. So one cannot just say that if I have a 10,000 users, so I should give certain valuation. Again, the process goes through lots of aspects, and perception of the founders, investor, partner, and the user needs to be taken into account, and then ultimately a valuation can be discussed.
Then, Mr. Jan, what you're talking about, the historical financial data
Mhm.
is not very relevant.
Mhm.
It is relevant for the growth sector. What is the projection? What
Mhm.
is the growth? And other aspects of also
Mhm.
regarding the product, its
Mhm.
viability in the market.
Mhm.
Other aspects should also be taken into consideration.
Sure. Yeah.
I think this is we want to convey to the listener that major aspect is not a historical data. Even a startup
Mhm.
having your investment or a investment from his relatives
Mhm.
can approach the investor for their equity contributions. I think this is nutshell we are talking about.
Yeah.
Another aspect is there.
Mhm.
If suppose how much minimum
Mhm.
or maximum
Mhm.
as an investor point of view, as a dilution should be there.
Mhm.
Suppose a startup starting, they are asking for 50% dilution. Whether you feel that it should be done,
equity investment, I would say it's a very, again, comprehensive exercise with many dynamics. But as a, kind of a onlooker on this kind of deal structure, I would say in the long run, this kind of deal structure will not be beneficial for both the sides. Like it's for the founders as well as for the investor. Because the scenario is that the startup cannot really, get a success through one round of investment. So they need to raise multiple round of investment from different investors, right? So it is important that, after the first investment, the next coming investor should also feel that there is a room for them in the cap table, right? So if the initial investor is taking more than or around 50% stake in the company, the next incoming investor may not be very comfortable because ultimately the execution team or the main founder comes into minority, and there may be certain challenges that may come in the business in the later stage. And ultimately, then the management team may not feel that they are equipped with enough resources to kind of run the company sustainably. Right? So these are the, kind of a primary thought which the investors applies while looking at a company to invest, right? But again, I will not say it's a thumb rule, but yes, it is more of a more convenient way for both sides to go forward and ultimately bring in more partners at a later stage, which ultimately will ensure that the company is kind of a significant player in its segment or the sector and ensure success in long run, right? So I would say, diluting too much at early stage will pose challenge at the later stage. If
that is a major point, Mr. Jan, what I am driving you. Because from the initial stage, startups should not dilute the maximum equity. And he starts with 5, 10% or 20% or 30% maximum. It should not be more than that. That is the point which I will come back to Mr. Jan to you again. Now coming to Mr. Mohan R. Lavi. He's a partner, KP Rao and Company. He is a fellow member of ICAI, having qualified in the year 1989 and hold bachelor degree in commerce from Bangalore University. He has over 25-year experience in the industry across the variety of industry. He worked a senior position in the company like JDA Software Private Limited and other companies. He is a short-spoken person and various conferences in India, so he represented himself and abroad also on accounting standard, IFRS, etc. He is also faculty member with the Institute of Chartered Accountant of India for their IFRS certification courses and with the Management Study Center, Chennai, from their corporate program. He is also expert panel of CFO Institute, New Delhi, and CAClubindia.com. And he worked on the various aspects, as in conferences, other things are there. Sir, Mr. Mohanji, just I am asking you,
Yes, sir.
what are the key challenges faced by professional in business valuations? Have any thought, Mr. Mohan, sir?
Yes, sir. First of all, of course, let me quickly thank you for inviting me and giving that very long introduction. I'm not sure it deserves so much of an introduction, but thank you so much for that. Thanks to
It is required, sir.
So yeah, I'll basically take off from what actually Nitin also said, and I'll keep my discussion only to valuation of startups because I think that seems to be the theme for today's this thing here. Of course, many of this can also be applied to general valuations, and I'm talking from the point of view of a professional, not from the point of view of a person who's receiving the valuation report or who's reading the valuation report. I think one thing which Nitin definitely touched upon and which we are seeing very much happening, especially in Bangalore, where I'm based in, wherein we've got so many startups, is definitely the authenticity of the data, sir. I think that data authenticity is something which is a major challenge we are facing. In fact, we know of startups who have received funding with very inaccurate, or I should say inadequate means insufficient data. So I think authenticity of the data is something which valuers will definitely have a challenge with, especially when we are valuing startups. Now, of course, we all know that in the startup situation, what we are doing is that we are basically funding the idea, not the balance sheet. That is the theme of the startup. As Nitin also was saying, they look at various other aspects. So we are just funding the idea, not the balance sheet or the financials as such. How big can that idea grow, and how important that idea is, how relevant it is. Um, I think this is a challenge which also we face, because in many situations we are also probably dependent on others or other experts in other fields to tell us what exactly is this technology which we are talking about. We're not sure. As valuers, most of the valuers who are coming out as per the Companies Act are from the Company Secretary Institute, CA Institute, and Costing Institute. They have a history, they have a background, they are extremely good in numbers. But if you ask me how much is the download rate and how much is the paid downloads and how much is the free downloads, we may have to look upon somebody else for that opinion. So I think to that extent, there's a limitation in the valuation of what we are doing, because we always rely on the work of another person in terms of how much authenticity we can add to those ideas, or those, as Nitin was saying, number of downloads, number of subscribers, number of free subscribers, number of paid subscribers. I still remember this major discussion which happened when Byju's was initially valued. They were saying the number of paid subscribers is very, very less. The number of free subscribers is very, very large. So how do you, allocate values between these two, paid subscribers and the free subscribers? So this is definitely a challenge we face, sir. One of the other things I would definitely like to mention also, sir, is that as you rightly mentioned, the DCF technique, it's much used technique, much abused technique also, if you ask me. The IBBI did a recent study on this valuation, and they came out with 2 observations on valuation reports done by professionals, sir. One thing they observed was that the discounting rate always is 10%. We do not know why. It just seems to be very good to do on Excel, I believe. I think so. That's the only reason I can think of. Discounting would actually apply to that specific sector. That's what one of the observations they made was that the discounting rate is normally only 10%, and the growth rate which is taken, the revenue growth rate which is taken, is only 5%. They did not say in as many terms, but basically what they were trying to say was that there are too much of template-based valuations happening on the DCF technique. When I'm saying template, I mean that we are just taking this and putting it as a formula. Of course, we do sensitive analysis, we do aggressive valuation and all the stuff. But when your foundation itself is not exactly strong, how do you value that? Especially in a startup scenario wherein we have so many other imponderables to take into account. So that is the first thing which I thought I should definitely tell you all. In the present day, I think one challenge we definitely have, and I'm sure Mr. Raghavendra sir also, ED sir also will agree with me, is that I do not think we have been able to figure out what is the impact of the pandemic even today, as we are speaking today. We are still, wondering what is happening on the pandemic, whether impairment has actually happened or not. Why is the Reserve Bank increasing the rates? What is the impact of inflation? How will that impact your valuation in terms of your discounting rates? So whether even your cash flows would change because of the pandemic, I think especially in a startup scenario, industry-specific startups or startups which are dependent so much on a consumer-facing industry, how do you take that into account? I think that is another challenge which I think we still have not been able to figure out, because we are still groping in the dark as far as what is to be concerned and what is exactly going to happen. How much do we factor in because of the impact of the pandemic? I think that's what I wanted to say in terms of these are the 2 things which I think are very, very important today in the startup scenario. Of course, sir, the last point I want to say is, as Warren Buffett has famously said, price is what you pay, value is what you get. He's always been consistently maintaining this stand. In terms of startups, I don't know, I think I'll also later on probably get your views, sir, and Nitin's views on other panelists' views on this also. I think, especially in a startup, the purpose of valuation is no longer going to be, as you rightly put it, the financials. There is a method of valuation coming up now. It's called as the VC exit method, which means that how much has a VC exited another similar entity or a similar startup. There is also something called as the 5 times raise method, which means basically that your value is 5 times what you get in terms of funding, which basically means that you're diluting 20% every single time. Though these are all coming under the bracket of market approach, sir, it is assuming that I'm going to sell off at some point of time. I'm not going to continue the business. So I think that challenge is definitely there. We cannot put a terminal value to this business at all then, because we do not know when the sell-off is going to happen. Even if we do 5, 6, 7 years, we're not very sure what is going to happen. This is my view. I will definitely like to take the views of the other panelists also on this particular topic. So these, I think, are the main challenges and valuations right now.
Very important, Mr. Mohanji. What you're talking about, the funding to the ideas. I think this is a major aspect of the startup lending, because idea is being financed by the investors. That's why bankers are reluctant to give a loan to the startup, because they cannot envisage that it is loss-making venture for that. They cannot finance 5 or 10 years should be lost.
Exactly.
The investor can do it because they are talking about the exit route. What you're talking about the exit route also. I think this is a major aspect.
Yes, sir.
Why I think you have touched very rightly at the growth rate is a major aspect for any investor to invest in a startup. So, sir, another thing is it is difficult to value the intellectual properties. Whatever it is are also talking about how the best practice for evaluating the intangible assets. I think this is a major aspect in the banking also, because nobody bother about the intangible assets. Whether you're talking about the goodwill, or you're talking about the patent, this is most important aspect in any business also, but they will never value it. Have any thoughts, sir, in that respect?
Yes, sir. Absolutely. I mean, yeah, I think if you ask me, this is probably remains a question which nobody can answer giving a formula, because IP rights and IP is something which everybody is having a challenge in trying to figure out exactly what is to be done for this particular thing. I will start from a basic accounting person angle, and then I'll move on to the methods which are being used right now, sir. One of the things which the new accounting standards are doing is that they are saying that these intangible assets need not be amortized. If you feel that it's got an indefinite useful life, it need not be amortized. So to a normal person, whatever price you are paying for that intangible asset will remain in the balance sheet for, let us say, 3, 4, 5 years time. It's not going to be amortized at all. Because once you do an amortization, you will get some fair idea about the useful life of the asset, and thereby your valuations can also probably figure out what is the useful life. So I think this is one of the things, especially in the startup scenario, wherein if you ask a startup person how long his idea is going to last, he'll probably say indefinitely. He's not going to say 3, 4, or 5 years. So he's going to probably say indefinitely only. So I think one of the things which valuers we have, one problem is that when it's not being depreciated, we don't know what is the standards. Of course, luckily do not say infinite, but they only say indefinite. If they say infinite, I think that will be another challenge by itself. They're only saying indefinite useful life. So that's one thing which first strikes me as the challenge we'll have in valuation of these intellectual property rights. Of course, it also depends on what is the type of the intellectual property, what are those terms and conditions of those IP rights, whether there are any restrictive clauses in that agreement. All these things would definitely play a role in finding out the appropriate value for those intangible assets. And sir, my honest view here is that this income approach, cost approach, and market approach, though they are only approaches, we will have to find an innovative approach within these approaches. We cannot, do a particular approach for this. We'll have to think of, many people have used the simulation technique called as the Monte Carlo method. Many people use what is called as the royalty method. In case the royalty is very critical to the IP rights. For example, I can straight away give the example of Maruti, which is that they've got a separate plant in Gujarat, wherein they're paying a huge royalty to the Japanese company. I would value it only on the basis of that royalty being paid. It's an extremely high value which they're paying. In fact, the main item in their P&L account is only the royalty they're paying for that. This is an exclusive subsidiary company of the Japanese company, not the Indian Maruti Suzuki. So there, I think royalty would play a very important part. But from whatever little I know, sir, there is a technique which is developing now, which is called as the decision tree analysis method. Now, this method is a little bit complex, but what it does is that it takes you through the entire life cycle of an intellectual property, right from the time of, let us say, the creation of the IP right, registration, towards commercialization, infringement, dispute resolution. What this method does is that at each stage, it gives a different present value technique or a discounting value for this. The reason behind this method, they are saying, is that at each stage, the risk becomes different. The risk for this IP rights becomes different. And later on, if there's an infringement, what happens if there's a dispute resolution mechanism or not? These factors would play a role there. The only problem in this decision tree analysis method is that it is a dynamic, it's a moving goalpost. We will never know exactly at what point of time, we'll only know the previous valuation. We will have to wait for the next stage to occur to get the next valuation. But amongst the methods, if you ask me, I think this is one method which sounds a little bit practical, at least considering the fact that IP rights have a life cycle of their own. This may be one method we can use for the purpose of trying to get at least what is called an appropriate valuation. Sir. I won't say accurate, but appropriate valuation.
Thank you, sir. Thank you, sir. Sir, I just wanted to know, this is regulatory valuations. When we are talking about the under the Company Act or we are talking about the Income Tax Act, so what do you feel that is a mandatory for anything? This is regulatory valuations?
No, sir. Companies Act 247 has put the onus on registered valuers only, section 247. So they're only registered valuers and they'll follow any of the approaches which we are discussing today: cost approach, income approach, market approach.
Okay.
The problem is in this rule 11UA of the Income Tax Act, wherein they put a formula. And income tax, of course, I do not know why they should get into valuation. That's a different view I've completely had. They should not get into valuation business at all. Yes. But there they've given a formula, sir. So we cannot go beyond that formula, only for the purpose of income tax valuation. So we will possibly have a difference between your registered value or valuation and your income tax valuation. There can be a difference.
Actually, my point was that only. I think you put the thread very well. Because under the Company Act, valuation something different. And yes, we are talking about the Company Act, the valuation entirely different. That is different scope yes, we are taking. Now it is a registered valuer who value the things under the Company Act and under the valuation also. Income Tax Act. It is their mercy, what they want to say. Thank you very much, sir. I think this is an important issue which we want to discuss with you. Now I'm coming, sir, I will come back to you. I'm coming to Sri Vinit Rathi, who is managing partner, Freestone OPR Advisor LLP. Mr. Rathi is a chartered accountant with almost couple of decades of experience under his belt. His extensive experience with the various type of industry, large, small, enable him to understand different industries and business. This understanding of business get translated into out-of-box solutions and value-added services to the client. His specializations include management risk advisory and corporate finance services. Mr. Rathi, just I want to know from you, what are the emerging trends that you are noticing in the business valuation right now? Have any view on that emerging trend, Mr. Rathi?
Good evening, everyone. Good evening, Gupta ji. Thank you. First of all, thank you so much for inviting me to this webinar. The trends have already been discussed over this webinar by Mr. Jain and Mr. Lavi. But let me, so while you're valuing, I'll keep it, I'll link it to the startup valuation because I think that is what we've been discussing since a while. Startup valuation is very different, and the way we've been doing it is, it's not a regular business valuation exercise. While you're valuing any startup today, you need to look at how sustainable the business is. Is that business going to sustain the test of time? the new businesses are disrupting the old ways of doing business. For example, the Zomato is disrupting the uh, the restaurant market like nobody's business. When Zomato started and when Zomato got listed, everybody was questioning the valuation. Today also people are questioning the valuation of at the rate at which the Zomato was valued while it got listed. But the speed with which these new age businesses can expand their territories. Could a old business expand? For example, if my business wanted to expand into 100 cities in next 30 days, can I have an office in 100 cities in next 30 days? The question that one needs to ask. Whereas these new age businesses, which are disrupting the way the businesses are being done, these businesses can expand into 100 cities in next 30 days. They can add user base, which is giving them the valuation. So while you are valuing these businesses, you are looking at how strong are their, how strong is their tech portfolio? Are these businesses sustainable? What is the technology background on those businesses? These are some of the things that you need to understand as a valuer. You need to understand before you really get into valuation. In fact, valuation, I believe, is more, you have to create a story around a valuation of a startup. It's not pure number game where you're running an Excel sheet and doing a discounted cash flow analysis and discounting by a particular discount rate. That is not what is going to help you while you're valuing these businesses. More and more people now who are into brick and mortar or old businesses are getting fascinated by the valuations that these new startups are getting. People are wanting to, I don't know, but people are approaching us to understand how can they get the valuation the startups are getting. They fail to understand that these businesses are, these people are creating ideas, these people are creating businesses that can replicate, that can grow at a pace that the brick and mortar businesses were not able to grow. So as valuer, we need to keep abreast with the new happenings. As rightly being mentioned by Mr. Lavi, today valuer is struggling with understanding what the COVID impact really is. How much is the COVID impact? If you ask this question, what would be the COVID impact? There hardly be a valuer who will be able to answer it correctly. So as valuer, I believe we need to keep abreast with the new developments, new happenings, new businesses, new ideas, and keep on creating solutions where value could be justified. So I believe the three things that are emerging today is our focus on sustainable business, the technology, and the disrupting behavior of the new businesses.
Very nicely, Rati Saab, you have mentioned about the three aspects, whether you are focusing and technology. I think these are the major aspects in anything for emerging trends, because your technology will play a very important role in future also in anything, whether you're talking about the digital banking, digital things. I think technology will have its own role. You can just point out, Mr. Rathi, in case of a stress assets, even parties are not doing well, liquidity problem is there, banking having the NPA level. If you want to do something for valuations, how it can be done? Have any thought in that respect? Mr. Rathi, you are unmute, Kalija, please.
Sorry. So distressed company is what practically we have been valuing in the IBC cases, and one of the biggest issue that we've been noticing with stressed companies is availability of information. These businesses are going down. They are losing people. information and data banks are not available, you need to question whether these businesses can last the test of the time. While you are valuing this business for distressed businesses, uh, you are expected to value these businesses under going concern assumption. Most of these assumptions, I believe, come from basic fact of our understanding that accountants create, that the businesses are going concern. We really need to question whether these concerns can be treated as going concern. While distressed, one of the problem with the distressed companies is data. The other concerns that we have on a continuous basis noticed is the management, the approach of the management, whether the management is able to or is willing to give required support to the valuer to be able to value the businesses is something that we have noticed day in, day out.
Very nicely. So, Lavisa, have you some idea for that? Even if for a stress assets who are going under the NCLT and for they are doing valuation, have any use of that? And if only data is the major concern or something different concerns are there, sir?
Yes, sir, of course. One is, as Vineet Bhai said correctly, yeah, data is definitely a concern there. And I just wanted to touch upon the aspect he mentioned about going concern also, because we as auditors, we say, okay, the company is a going concern. But seriously, if you look at the IBC cases which are happening today and the sort of resolutions which are coming up, many of them have actually not passed through the COC also. Many of them have actually gone down. Actually, many of them have actually been liquidated also. There have been, apart from those, I think up top 100 or top 150 companies, I think lower may, I think a lot of these companies have not really, gone through a proper, I mean, they have gone through a resolution mechanism, but they have not gone through the, they have not, valuations have always been questioned there because we could have issues in terms of, exactly whether the company is a going concern, of course. Of course, the concept of a slump sale is always there, wherein you are putting all your, you're putting all your assets into one basket and selling it. So that is a slump sale valuation which is there. But that is invariably driven by the market, and it also driven by basically, sir, what are those assets comprising of? If it is land, it carries a value. Anything else apart from land has absolutely little value, especially for these, IBC companies.
I agree with you. This is my point, because only land has value. Even people are telling in one of the liquidation case, the land also depreciated. That's also a very important issue. I'm just telling you.
The biggest real estate company in India is the Indian Railways, sir, not any of the other people.
That is also point in that. Now, sir, I will come back to you, sir. Regarding, I am coming to Hemant Sharma. He is a founder Core Financial Solutions. Mr. Hemant is engineer and management graduate from IBS Mumbai. He is also CFP, Certified Financial Planner from the Financial Planning and Standard Board of India. Prior to starting his own venture, Core Financial Services, Hemant has worked with banks like ICICI Bank Limited as wealth manager for nearly 3.5 years, with Axis Bank for nearly 1 year. During the working tenure, he has equipped himself with the skill of financial planning, wealth management, portfolio management, and learned a lot of aspects of the client relationship and client services. Hemant sir, just I want to know from you, different regulation in India has prescribed differently. And at some of the places, even contradictory valuation requirement to be applied to specific situation. In some circumstances, no valuation methodology is specified, and business valuation is left to the license registered value discretion. I think this is the major aspect which I want to know from you. Being a banker, being a financial planner, have any view on that aspect, sir? Mr. Sharma, sir?
Hi, sir. Firstly, thank you for providing me an opportunity to speak in such of prominent personalities. I mean, the point what you have raised out here has already been addressed by Mr. Lavi and Mr. Raghuvinder. I mean, if you talk about the valuation in terms of perspective for income tax, the value and a person who does a registered value, these both valuation would differ. I mean, if we talk about prior to 1st February 2019, the valuation earlier was being done by the SEBI registered merchant banker, or maybe chartered accountants are considered as the most appropriate people to do the valuations. But over a period of time, after 1st February 2019, the registered valuation, the registered valuer, no one other than the registered valuer is the authorized person to do a valuation as per the Companies Act, which has been presented in 2013. So, I mean, over a period of time, things are evolving, and the registered valuer would be a person who would be taking care of everything. And except of that, the valuations would be done on land, asset, physical asset, and except of that, on the security and financial asset also. So, what we believe that once the registered value provision gets streamlined and Indian valuation standards come in force, the other regulators are also expected to cover the same under their respective things.
So, Mr. Sharma sir, how do one go about bringing different investors and companies valuation perspective to a consensus? Because the different investor have different view, different valuer have a different view, and how you have a consensus, how when you as an investor, how you take a decision for that, and how a startup or any company will view the value of their equity. Have any thought in that aspect, Mr. Sharma?
This seems to be quite tricky one. The reason for that is because from an investor, particularly investor point of view, if we talk about, the investor is more interested in having more equity share in the company, having a more of equity share in the company. And on an perspective of a business, if we talk about, then the perspective would be that the business owner would try to have the maximum valuation of a company so that at least the less of equity dilution happens at any given point of time. So there's a very to have a common consensus, because we are talking of startups as of now. I believe valuation is basically made out of three things, which is basically, if we talk about a startup valuation particularly, then it is that the factors that make the startup valuations are, you can say, what is the developmental stage of the of a product or a service in a startup, what is the valuation of a peer or a similar company, and except of that, the proof of concept in terms of what is a team of a startup from the CEO to the ground level, and except of that, what is the existing revenues and existing strategic relationship with the client. I mean, these are few of very key important points in terms of deriving a valuation to a startup. Now, coming to how uh, you can say the investor and the founder come to a common consensus would be, we have a view that the more transparent you would be with the investor. I mean, because if an investor is investing, obviously in a startup, then the startup has to be very realistic in terms of number. It cannot be some hanky panky stuffs to be given in. The more realistic a startup would be, the better would be the chances that the better would be the chances that they have a common consensus, because every investor realizes that they do the comparable market study, they try to address the total addressable market share and what is the market opportunity available for a startup. So if a startup goes with the hanky panky numbers, then in that case it would be very difficult to have a common consensus.
Thank you, Mr. Sharma. I think, so now coming to Mr. Lavi sir, there is one question, Lavi sir, from Mr. S.C. Agarwal. Why the idea of individual cannot be treated as a startup? Why the idea of the company is only finance? Have
His
any
question
view?
is, yeah.
Why
Okay.
the idea of individual cannot be treated as startup?
So Agarwalji is asking basically, why can't an individual get funding as a startup?
Yes.
That's the question. Okay, Agarwalji, my only response to that is going to be that there are two things which investors would look at when they're looking at a startup. One is the idea, second is the team. And one person doesn't make a team. So I think that is why they would expect you for execution of the startup idea. They would probably expect more than one person to be there. So you can think of the concept of one person company, but I don't think investors would be very keen on this concept of OPC as we are speaking today. The minimum they look for is an LLP.
That means minimum LLP is required. What you're talking about, individually it is difficult. Lekin the idea can be selected, even investor desire. I think they can give a equity. There's no issue in that respect. It is depend upon the investor.
Yeah, this is what even Hemanji was talking about. How do you execute it? One person can't execute it, right? You need to have a team for that, right?
That's true. Because team is also one of the factors
they consider
deciding any investment for that. Team
Right.
is also an important issue here. So another sir point is from Partha sir, how much equity could be given to investor for the first round of investment? What is the market standard, if any? Have any idea, sir, in that respect? Anybody?
I think you already answered this question, sir. Initially, 20 to 30 is not already.
What we are told very clearly, 5 to 10 or 10 to 20 and 20 to 30. 30 I think I should not go more than 30. Jan sir, you want to say something? Jan, you want to say something?
The founder or the startup may look for a lower dilution, but as per the fund ask, it should be supportive to a higher valuation as well, because ultimately the valuation will depend on how executable idea is there and how efficiently the startup will be able to utilize those funds, right? So it's not just from point of view of structuring the deal, but what is that the startup is going to do on the ground. That is very important to understand, right? So it cannot be reversed that, okay, first we decide the valuation and then we decide what we're going to do and how the valuation will be. So first has to be what is the product or solution that the startup is looking to kind of launch in the market, and how will they penetrate, and what is the fund requirement for that. And then we can create a correlation that what kind of scenario that we can build up, so the situation becomes win-win situation for both the sides, right? So ultimately there is no more perfect rule or certain approaches to follow. We have to see the dynamics of the deal and the startup, and ultimately create a structure which is beneficial in the long run.
Very important, Jan sir. I think you are touched very rightly, because your valuation will go up. If you are starting from the 50% or 30%, then valuation will be reduced. Now, Mr. Ravi Shankar Iyer, there is extensive dependency on the industry technology expert to arrive at the valuations. What are you talking about? At the time, due to lack of understanding of the industry or domain, the banker or CA may be challenged to certify. How is this being addressed? Anybody? Sir? Rathi sir, do you want to say something?
Just a minute, I'm trying to find myself. Yeah, okay, sorry. So yes, as rightly been said, am I on mute?
Audible. Yeah, go ahead.
Okay, sorry. So I was just looking at the question. So what Mr. Ravi Shankar is saying, that you need to have an expert to be in order to derive a number or a valuation exercise, which I completely agree. In any business, you need to have an expert to be able to, who understands the business, who understands the industry. A valuer is expected to know and understand the industry. If he doesn't understand the industry, he'll not be able to do or justify the numbers that he's running. It's not a mere Excel working that a valuer is expected to do.
Yeah, I would like to add to Mr. Vinay that in order to arrive at a proper valuation, 3-4 basic ingredients are required. One is that necessary documents, due diligence, tax returns, etc. have to be verified. That is the prerequisite. Then the industry data is also required to be collected, has to be analyzed. And to arrive at an valuation in such cases, appropriate market comparables have to be taken into account. Of course, an expert's view and expert's opinion is very much required, there is no doubt. But in the absence of these, I think some of the parameters which has to be taken by a valuer is this. With that, it will be comparable valuation. That's what I feel.
Right, sir. There is one question from again Ravi Shankar here. So he's just asking, there is a concept of freemium premium, where very few or a small percentage of paying customers pay for the fees subscribed in companies like LinkedIn, but the company in turn leverage the huge number of subscribers who can potentially charge to the business opportunity. Have any view in this respect? I think this is only a suggestion, nothing more than that. It's not a question.
It's a statement, I guess.
It's only a statement. Another thing is also a statement from Balaji. So I have nothing to say for anything else. So now at the end, I request.
Guptaji, I just wanted to inform you, Ravi Shankar is a good friend of mine. He messaged me.
Oh,
He's
that's
a
why he's asking you, sir. Very nice.
No, it's okay. It's okay. He served about 35 years in IBM and now he's just retired from IBM. I think he wants to launch a startup. That's why he's asking these questions, I think.
Yeah, it is better, sir. It is better. So we will going to support him. Anything is required for any DPR or something required, a researcher is helpful to them. For that.
Yeah. I'll give him your number, sir. Don't worry.
We are also there, sir. No problem. Sir, at the end, we have tried to cover all the points. I think today discussion is a practical discussion. And I think it will be useful for the our members, the participants, other things are there. In the end, I am requesting, sir, if you want to say something, advice to the member who is listening to you in respect of valuation in other things. So I request ED sir, please give your last word to our listeners.
Yeah, thank you, Gupta ji. Very valuable suggestions and guidance have come during the course of discussion. My only suggestion to the members, especially to the startups, is building a good track record is very important. And in order to gain the confidence of the investors and the lenders, basic homework has to be done by the startups, like with regard to building up their profile and the other documents required. And whenever a discussion is held with the investors, all the things should be presented, all the perspectives should be presented as far as the present setup and the perspectives also, so that the bankers get a confidence. So it is very important what is the future perspective and how the company will come to a break-even situation and at what point of time. So these things are required. So as I said in my initial remark, this is still an evolving situation, and more things will be clear in the days to come. Because only in 2013 the Companies Act has been amended to make this registered valuation concept has come into force. And now I think IBBA has been recognized as the agency for these things. So these are all certain things which has evolved over the years. But in the days to come, it needs to be further crystallized. Let us see, let us watch and wait. My best wishes to all the startups on this occasion.
Thank you very much, sir. Thank you. Lavi sir, you want to say something? Lavi sir.
Sir?
You want to say something, sir?
No, nothing.
And Mr. Rathi, sir?
Nothing, sir. Thank you so much.
And Mr. Sharma ji,
Thank you so much, sir. It was quite insightful, I would say.
and Mr. Jan, you want to say something?
Nothing from my side. I think the discussion has been.
I'm really at the end. I am thankful to all my eminent speakers, respected Ravindra sir, who is executive director. He always obliged us, and even all the participants. When I am getting a feedback of in so many webinars, everybody was asking that he should be invited again and again. So I am also giving him trouble again and again. I'm sorry for
Thank
that. You are very obliging me. I
you.
want to express my gratitude on behalf of myself and Research in India for your obliging us, for blessing us. I'm thankful to Mr. Mohan Lavi sir. I think his well thought will be useful for the participant, our members also.
Thank you, sir.
Thankful to Mr. Sharma ji, who is also well thought opinion he has given to us, and thankful to him. I'm thankful to Mr. Rathi sir, who is also given well thought his views to the participants. Mr. Nitin Jain, I'm thankful to you for giving a startup, how a startup can be valued. I think this is an important aspect. On behalf of the Association for Financial Advisors, Research in India, I express my gratitude to all the eminent speakers and all the participants also. I think with their blessing, we are coming mostly every week one webinar. We hold about 19 webinars under the series of the associations and more than 120 webinars for the Research in India webinars. Beside the ASSOCHAM and other PhD chamber, FICI, so we are also financial advisor to these people and we are also conducting some webinars with these people. So Research in India is conducting all the technical viability study. Beside the debt syndication, preparing the DPR, valuations also we are undertaking it, and we are a approved valuer, registered valuer also. So, and we are investment banker, we are merchant banker, and if any service is required for the valuation or otherwise, so we are at your disposal for all the times. So I am also requesting at the end for the Association of Financial Advisors, we launch our drive for the membership. Our aim of the association is to impart a knowledge to our members in respect of financial aspect, in other aspects also. So recently we are conducting one GST also, and we are associating with other associations also, where they are being invited as a moderator or as speakers also. So we are at the end. I'm thankful to my back team, Rohan, and other people, Mr. Surinder Singh, and other my IT teams for taking the lead and arranging the workshop very nicely. Thank you very much. I am really obliged, and I think we will get the feedback of the recording I will share with you. Thank you very much.
Thank you.
Thank you, sir. Thank you, sir.
Everyone.
Thank you very much.